Good day, ladies and gentlemen, to the mining news on Commodity TV. The gold rally is taking a bit of a breather, which is not surprising and something we expected. On the other hand, assets under management in physically backed gold ETFs continue to rise. According to the World Gold Council, net inflows at the beginning of April were led by 26 tons in the US and 20 tons in China. On an annual basis, investors increased their holdings by 9.1% or 293 tons. This once again underlines the safe haven status of gold. However, silver, which has not yet really been able to benefit, could open up enormous upside potential as it is also an industrial metal. Looking at the debt orgies and special assets around the world, a recession is unlikely to occur. The economy is more likely to stabilize, and silver is also in deficit for the 7th year. Don't forget that. We are also fully committed to silver and, of course, to gold. Gold Royalty reported preliminary results for the first quarter of 2025 with total revenue, land contract revenue and interest totaling $3.6 million or 1,249 gold equivalent ounces, the GEOs. Royalty streams, pre-production and loan interest increased in 2025, while land contract revenue decreased by $1.5 million due to higher one-time payments in the first quarter of 2024. Revenues are expected to continue to increase in 2025 due to strong commodity prices supporting the company's cash flow. Royalties at Canadian Malartic, Côté, Borborema, Cozamin and Borden, which is the Porcupine mine, and the Vares copper stream. Gold Royalty maintains its 2025 annual production guidance of 5,700 to 7,000 GEOs, issued on 20th March 2025, and expects production to be more focused in the second half of the year as recently commissioned mining operations, including Côté, Vares and Borborema, continue to ramp up to full production rates this year. Gold Royalty continues on a growth trajectory and the stock is far too cheap. Canada Nickel has welcomed the introduction of the Protect Ontario by Unleashing Our Economy Act 2025 by the Ontario government. It is primarily about cutting red tape and enabling more efficient development of critical mineral projects across the province. The bill aims to shorten project approval timelines, recognizing the urgent and growing need for responsibly sourced strategic minerals like nickel that are essential to North America's clean energy transition and future industrial competitiveness. Canada Nickel's Crawford nickel sulfide project, located just outside of Timmins, is one of the largest nickel sulfide resources in the world and a cornerstone of Ontario's critical mineral strategy. The project will bring significant economic benefits through job creation, investment in local infrastructure and a long-term supply of low-carbon nickel, which is essential for the energy transition. This should accelerate the permitting process and is also expected to result in massive financial support. Canada Nickel also supports the government's decision to designate the Timmins region as a strategic economic area, and Timmins is an ideal location for investment in clean nickel production, value-added processing and downstream manufacturing. The stock is a buy with a target price of $2.5 Canadian. Goldshore Resources again announced very good drill results from the ongoing 20,000-meter drill program, as well as initial results from the QES-Up program targeting the near-surface extension of the northernmost QES shear at the Moss Gold project. In addition, drilling targeted the main QES zone to determine the continuity of high-grade mineralization and its orientation. Results from two holes that closed significant drill gaps in the QES zone intersected wide intervals of good mineralized core, including the highest grade times thickness intercept ever reported by Goldshore. The results confirm the presence of near-surface, high-grade gold mineralization within the core shears and demonstrate the potential for the discovery of additional deep-seated shoots. In addition, results from NQD 25171 exceeded grade expectations based on the current mineral resource estimate, with best intercepts of over 124 meters at 1.65 grams gold per ton from 295 meters depths, and 77.5 meter with over half a gram gold per ton at the depths of 203 meters from hole 170. 3 additional short holes and the 2 extended holes successfully intersected near-surface extensions of the deeper marginal shears along the northern margin of the QES zone at QES-Up, with values on 3 to 13.5 meters and 0.36 grams to 1.6 grams gold per ton of rock at moderate depths of 75 to 138 meters only. Goldshore is becoming increasingly valuable and the share is favorably valued. You can also find all the information on our Commodity TV app in German and English, as well as everything to do with commodities. Please note the disclaimer. The shares discussed are part of the SRC Mining Special Situation Certificate, and I am a shareholder, direct or indirect, in the companies. Thanks for watching us, and bye-bye from Switzerland.